Alright, I want to give an updated take on I-bonds and the future of them. Right now, they're giving a 0.4% interest rate on the life of the bond. And right now, I think it's like 6.48% or something like that. Yeah, 6.49 right now, plus the 0.4%, so 6.89 for 6 months. Still really attractive for now. It's most likely going to take a huge drop the next 6 months. I predict right now maybe 2.5% plus the 0.4%. This inflation report came in like negative 0.1, and November's came in 0.1. So, if I'm not mistaken, we're at a 0 right now, 2 months in. So the next 4 months would have to be some insane inflation, which I hope it isn't. I really hope it isn't. Maybe we'll get back to a 3% inflation rate in a few months. Currently, the year inflation rate right now is at 6.5%. But if we get a couple more of these like 0 ratings or negative 0.1% in the next 3 to 4 months, I mean, that would lower our year-over-year by so much. And a lot of the inflation really happened June. It peaked. July is 0, August is 0.1, September is 0.4, October 0.4, November 0.1, December negative 0.1. I mean, in those 5 months you have 0.9%. So at that rate, you kind of are on track for a like 2.5% inflation. That would not be unheard of in another 7 months if we keep going at the rate we have been for the last 5 months. So the last 2 years or whatever of I-bond dominance might be coming to an end here soon, which, I mean, if inflation's down, I'm all for it. I think there's still a good hedge to keep. Probably stocks are going to be better, but I'm okay with not losing money and just accruing principal and having a bond part as well as a stock part. Just a little update on how the I-bond market is going, and the U.S. Treasury is still hovering around the 4% mark, so I think that's going to go up, though, in February when they raise interest rates again. I think undoubtedly they're going to do a 0.5% interest rate, and that's going to make the 10-year Treasury go up quite a bit, I would think.